So I'll start with, we can flip to the agenda slide, please. So what we're going to go through between Claes Nyqvist, who's the CFO, and myself, Anders Nyström, as the president and CEO of the company, is Bulten in brief, the market development, the second quarter of 2020, and what's in focus for the rest of the year. So if we flip to page number 3, please. There's a brief history of Bulten. Bulten is an old company going on 150 years now, founded back in 1873. And it's grown to be a global provider of fasteners to primarily the automotive industry, but also to other industries. Currently, we have about 1,400 employees in 8 different countries and serving customers worldwide.
Next slide.
Next slide, please. Number 4. This is an overview of our customer base. And as you can see, light vehicle OEMs is the by far the biggest customer group, followed by suppliers to the auto industry, heavy vehicle OEMs, and others. Most of the others came in through the acquisition of PSM, which was completed in February of this year. And it is a strength to be accredited suppliers to this many OEMs and suppliers in the auto industry. Once you have your supplier code, you have your audits done, and then you're also a recipient of or a possible recipient of new business, which is a threshold to get over. So this is in our opinion, a very strong customer base, which will help us to grow in the future. Flipping to page 5, just to show some of the uniqueness of Bulten. There is actually nobody in our competitive set that has the geographical reach that we do. With manufacturing in the US, in the UK, Sweden, Germany, Poland, Russia, China, and Taiwan, and with logistic centers and representation in a number of locations where our customers are present. Should add as well that one of the primary drivers of this being an advantage is that, as you probably know, our customers are developing global vehicle platforms, and being a one-stop shop to them means that they only need to choose one development partner, and they can source any part number to one supplier, regardless of where they build the vehicles coming off of that platform. So it's a major advantage. Moving to page 6. In February of this year, we presented our strategy that we call Stronger 24. It's a 5-year strategy stretching from 2019 into 2024. And we did that in connection to our Capital Markets Day in Stockholm in February. And as part of the Stronger 24 strategy, we also presented new financial targets, where we intend to grow the company from what was then about 3.1 billion up to 5 billion in 2024, and to take the EBIT margin up to 8% and the ROCE to 15%. And we'll come back to some of the enablers in the later slide. Just need to highlight as well, if we flip to page 7, that we still utilize our FSP concept, a full service provider concept, as a major growth engine. It's been driving growth for Bulten for a long period of time. In the last 10 years, it's been a major enabler for growth. and we continue to do that. And as many of you probably observed, we also won a major FSP contract during the summer of this year, in the midst of the COVID shutdown. And that was a contract that was transferred from one of our competition in that case, worth about 60 million euros in full pace. Flipping to page 8. And these are the sort of building blocks of our Stronger 24 strategy. To begin with, we do have a strong position with our heritage and our customer base, our financial platform, and the credibility when it comes to delivering sustainable solutions. Among other things, this is manifesting in the product family we call BUFO-E, which we presented earlier this year, which is a new product family that actually brings energy consumption down with about 50% and CO2 emissions from the manufacturing process down about 30%. We will drive growth primarily through organic growth. We have a strong organic growth momentum right now. We've also acquired PSM earlier this year, which also has an inherent organic growth in it, but it's by definition, of course, a non-organic portion of our growth as we acquired it. And this will take us to the 5 billion SEK in 2024. Margin expansion is going to come from acquisition synergies, which we're of course harvesting as we speak. Strengthened positions in China and the US, which has been a priority for us as we are still, from a revenue standpoint, a very European-centric company. And we have all the intentions to also gain market share in China and the US. Economy of scale, of course, production and distribution efficiency is something that we've been focusing on a lot during the COVID shutdown, and we really utilize the opportunities as our plants have been running at a lower pace to make changes to our production setup in order to gain efficiency, both from capital and margin standpoint. And we're also looking deeply into our distribution network to make that more efficient. Technology is another cornerstone which we're investing in, and many of you saw our minority stake acquisition in Tension Cam Systems, which is one of the steps in that direction, giving us the ability to actually monitor clamp force in screw joints in a very affordable way. All of these building blocks will then take us to an EBIT margin of about 8%. And the strong financial platform that we do have still, even after the COVID-19 situation, allows us to invest, allows us to grow, and is not, maybe as opposed to many of our competition, it is not a restriction for us. So, talking about market development, we go to slide 10. I don't think this is news for any of you. You know very well 2020 is what it is in terms of vehicle sales and vehicle production. I think most forecast makers, and included in that group is LMC Automotive, which is our primary source of market data. There is consensus among the forecast makers, I think, that 2020 is going to be about 20% down. We see a strong rebound in 2021, but not up to the pre-pandemic levels from a market standpoint yet. And the same can be said for heavy commercial vehicles. Having said that, we are We are determined to grow faster than the market and rebound faster than the market by gaining market share, which we are doing through the new contracts that we've signed. Looking at second quarter then, the mitigation effects that we took during quarter two to protect ourselves and our cash flow and our business during the COVID-19 crisis was that we withdrew the dividend to protect cash flow. We applied short-term layoffs and utilized the government-sponsored support programs in various countries in order to support our cost structure. We did halt investments, and then the biggest one of those was that we put a pin in the investment in our Polish facility that we've announced previously. That's about a 200 million investment that we chose to delay. During quarter two, we also acquired a minority post and tension cam systems. As I mentioned, this is an important collaboration that we're now deepening together with Tension Cam to develop technology for clamp force monitoring. After quarter two, Bulten was awarded an FSP contract of about 60 million euros at full pace from a major European OEM. We made some changes to the group management, introducing a new chief commercial officer, a new acting CFO, who's beside me, Claes, Nyqvist, and a new COO, which is also a new position in the management team. And we made the decision to expand our manufacturing facility in Taiwan and sign a lease contract for a new building, which will give us both efficiency improvements and chances to grow. During the crisis, I won't go into detail on this, but of course we did what we had to do. We applied short-term layoffs for about 1,200 of our employees, various stages, and as we speak, we're now that number is diminishing dramatically as we're now revving up our production again to meet the demand from our customers. So by that, we're into financials for quarter two. So I'll leave the word to Claes.
Okay, thank you, Anders. Yes, I will not keep us looking into the financial figures for that long. The Q2 figures has already been presented and reported, and I take it you have all read it through. So let's move to the next slide, please.
And that'll be slide 15.
Slide 15, yes. As you can see, we have been affected by the COVID-19 situation, mainly started in April. The industry as such had major shutdowns on a global basis, I would say. Especially Europe and North America came in a little bit later than China. That came up running a little bit earlier. The slide down to the right is just giving a notice on the situation coming back from a really low volume situation due to the COVID-19. So there has been improvements in Q2. Okay, next slide, please. I also would like to introduce you to our key figures and especially guidelines, where we have a guideline of average net working capital as of sales between 20% and 25%. We are now running a little bit higher than that, but in a normal situation, that is our goal and what we're aiming for. Capex as percent of sales is between 2% and 3% in a normal situation. Not taking in capacity investments such as the building in Poland, for example, that was mentioned earlier by Anders. So that will drive that guideline up, of course. Depreciation as a percentage of sales is between 4% and 5%. And then also depreciation when you exclude IFRS 16 as percent of sales is between 2 and 3%. Tax rate between 24 and 28%. Okay, next slide, please. I would also like to mention our new financial agreement. As you all know, and that is reported in our annual report. Our main bank, Swedish Handelsbanken, we have a financial agreement together with them with a multi-currency facility of 750 million. In Q2, we also introduced a new bank into the group, which is Danske Bank. And that is mainly a facility to support our Polish operations down in Poland. So with that said, I think we have a really strong financial platform. And the last bullet also, it's important to understand that all our covenants has been met during the year so far, and as far as we can see, this will continue. Thank you.
So, looking into the rest of 2020 then, and flipping to page 19. This is a picture that those of you who normally tune into our quarterly reports are familiar with, but I'll explain it to you. What this really shows is the magnitude of the contracts that we have signed and that were not in our revenue stream yet as we left 2019. So when we speak about the inherent growth momentum that we have, it's not wishful thinking. This is actually hard contracts that we do have in effect, and that's either ramped up since the end of 2019 or about to ramp up. And the value of those contracts is 107 million euros per year in full pace. And between the end of 2019 and during 2022, this will be up and running full pace. So this is, why we have a lot of confidence in the growth momentum that we have. In focus then for the rest of 2020, well, of course, we need to continue to mitigate the current situation in the industry. We're not out of the woods yet in terms of the COVID-19, so we're monitoring that very closely, even if ramp up right now in our customer base is very steep. Apply strict cost and cash flow control. Of course, we will not release any of that pressure yet. Prepare for swift ramp up, which we can do. We are very flexible in our supply chain, and we can change production pace as the demand changes from the market. Capture PSM synergies, that's a big one for us since we acquired PSM, and we'll have a lot of good things coming out of that. Seize turmoil opportunities. What we mean with that is that we tend to see a crisis not as necessarily only a bad thing, but there's always opportunities coming out, and we are on our toes to make sure that we seize any of those opportunities. Increase innovation and sustainability activities. I think we demonstrated that already this year that we are, and will continue to do so, and execute our Stronger 24 strategy as a whole. And I can boldly say that we've spent most of the crisis months and weeks of this year focusing on executing strategies rather than firefighting, which I'm very happy for. And that brings us to the end of this presentation. And for those of you who may have tuned in during the presentation, we cannot hear any of the questions. You can hear us and you can see us, but we have no visual and no sound.